Today, I'm really happy, and I think we're all fortunate to have four very distinguished panelists who lived through different types of companies, some in the software side, some as SaaS businesses, in terms of scaling the companies, and look forward to hearing from them today. Just real quick, we have first here on the right, Tom Tovar. Tom is currently founder and CEO of a social marketplace company called ShopMoxie. Still somewhat in stealth mode, but gradually coming out. But before that, he was CEO of Nominum, and that was a company that Tom scaled from the first initial millions of revenue to 50 million plus in run rate. Next to Tom, we have Diane Updyke. Diane was most recently VP of Sales at a social marketing company called Crowd Factory. Last year, Crowd Factory was bought by Marketo, and we all know Marketo had a fantastic IPO yesterday, so congratulations, Diane. Yeah, you're buying beers after this, I guess. Next, we have Kris Duggan. Kris most recently was CEO, he's co-founder and he was CEO of Badgeville, and under Kris's leadership, in 3 years he grew from just a handful of customers to hundreds of customers at Badgeville. And finally we have Lynn Kuriyan McInerney. Lynn is currently VP of Marketing at Appcelerator, and Appcelerator has grown to 50,000 mobile apps supported. It's a mobile-first development platform, and 115 million devices, so that's some impressive growth as well. So I'm going to open it up and actually ask a question to all the panelists to start. And I think before we can talk about how to grow a company, I think it's important to think about, what is growth and how do we define growth, because I think there may be some differences across the panelists. So we'll just start with Tom here and go down the line. It's probably easiest.
So the question is how do you define growth?
Define and measure growth.
Okay. So hello everyone, welcome. I would say growth is defined really between, if you're lucky enough to have investors or you're lucky enough to have advisors, people sort of sometimes forget that a company is a social exercise and you have to sort of get everyone's buy-in and everyone's view on what growth is. So in a lot of ways, growth can be different for any style of company, any class of company, any different product. A lot of times people want to put specific things on it, but it really is something that comes down to an agreement between you and your board and your investors and your advisors. So that's what I would say.
Okay. Hi. You said it very subtly. I was going to say growth is whatever your VCs tell you it is my experience. But I also look at it in terms of metrics. So originally it's all customers, right? Customers, any way you can get them. That's really the growth that you're looking at. And then we move into the metrics. And it could be annual contract value, and we might move into MRR, monthly recurring revenue. But then we're looking at net MRR, which is, are we bringing in more revenue than we're losing in attrition? So that's the first sort of mechanical piece of it. The second thing I'd say is growth there's a bit of a feeling about it because you never really know if you're going to make it. I sat there at WebLogic, at Eloqua, at Crowd Factory, and we had so many days where we said, are we on the right track? Should it feel this way? This is really hard. So there's a feeling that at the 2 million mark, at about the 4 to 7 million mark, you really know you have traction in some repeatable sales model. So if I had to just pick where growth is, I'd say it's about the 4 to 7 million mark, and you're growing over 50% a year.
Yeah, I would agree with a lot of that. I think growth is revenues that aren't flat. So you are adding revenue, and you're adding customers, and you're adding and growing sales. To the feeling point, I think it's kind of the difference between, are you pushing on your market, or is the market pulling for you? And there's a pretty big difference in the feeling between, having to knock on doors and, convince everybody that this is a new thing versus companies starting to come to you, asking for your opinion, wanting to get you engaged. And so I think, you're in a growth phase when that starts to happen.
Thanks. I'd say for us at Appcelerator, and I'd say in general, I define growth as when you're hitting product market fit. So this kind of dovetails off of what Kris was just saying. When you know you're solving some real pain points that people are feeling acutely in the market, they're coming to you very naturally. Appcelerator has two models. So it has a freemium model. So we saw developers, mobile developers, just take off. The amount of apps that they were creating on our platform take off. We have over 50,000 apps, as we were saying earlier, and they're on almost 130 million devices. Now, you get a ubiquity by having a lot of growth on the freemium side, but then you want that to translate into real pain points that you're solving that can translate into revenue as well. And so metrics on that side, as Diane was saying, TCV, ACV, your renewal rate, looking at how that growth is going year over year, and that you're increasing your customer base, and that you're moving out of that early adopter phase where you're speaking to the revolutionaries and you're painting a vision of a world that didn't exist, and a set of pain points that people don't even know they might have, to the point that this becomes a line item on the budget where everyone needs to solve this problem. This is an established problem in the market.
Great, thank you. Well, with that, I think we all look back after, and all of you have been at companies that have successfully made it through the growth stage, into and through the growth stage, and you can always look back and say, well, that was easy. It looked like, from the outside looking in, the untrained eye would say that looks like it was a well-oiled machine and a defined process that you basically followed to get from point A to point B. We all know it's never that way. So we could start with Lyla and work our way over. Maybe talk about either your current company or other companies where what were some of the roadblocks, some of the speed bumps, some of the things that, pick maybe one or two that sort of popped up along the way that you can share with the folks here.
Sure. So I think, there was at Appcelerator, there's so much great stuff going on. Like I was saying with the freemium side, there's just tremendous growth. There's so much fit in the market. There is just all these macro trends that we're at the center of. But going from how do you take a very large, a very vibrant, growing developer base and translate that into real corporate sales in a repeatable, sustainable, predictable way, that was really a big transition point for us. So going from saying, okay, we've got a very large developer base, how do we monetize this, to saying, okay, you know what, maybe the developers give us a lot of credibility, they drive a lot of validity in the market, and certainly they are working in or working for enterprises that need our overall platform, which goes much more than just development, goes across the entire life cycle. But how do you make that transition? And then even just from a branding, from a marketing point of view, how do you make that transition to the market? You're known as an open source developer tool, and yet you're selling and you're having success as an enterprise-grade platform. How do you have those two live together? How do you position that in the market? So I think those were some of the big things that we had to think about as we were growing that were pretty complicated, and trying to figure out how to do that.
Great, thanks, Kris.
I think with Badgeville, I think we had some pretty good fortune on our side in terms of launching the company and the timing involved with that. When I launched the company, this was late 2010, there wasn't a gamification industry. And, fast forward now 2.5 years, and now there's a whole industry around gamification. We've raised $40 million in capital. We're considered the leader in this category. And, companies come to us when they want to add engagement techniques to their experiences for their users, whether that's customer-facing or employee-facing. But when we launched the company, I remember the very first day we launched at TechCrunch, a great fanfare, and that day we turned our website on, and I think we got like 50 leads. And then, we thought, oh, wow, is this just an anomaly? And the next day we came to work, and there were another 50 leads. And then the day after that, 50 more leads. And actually, we've had about 50 leads a day every single day since September of 2010. And, I think the interesting thing is kind of also maybe how those leads have changed. In the beginning, it was like startups or small teams that wanted to add gamification, and now it's like the Fortune 100. And so I think where we've kind of maybe had opportunities around growth, it's like, how do you navigate, what are the use cases, what are the applications of gamification, is it loyalty or is it employee productivity, and trying to really learn those areas so that we could really drive repeatability in our sales model. And I think we did that successfully, and as a result, we've also seen the market kind of move up market, and the enterprise piece of the market really mature. And so that has been something that's really kind of allowed us to fuel our kind of incremental growth as a business.
What about a speed bump? You had to hit a speed bump somewhere.
I mean, a lot of the speed bumps are, I guess, around, staffing. How do you, we grew, in 2.5 years, we grew to 100 employees. And so, I mean, just imagine how much hiring and interviewing you have to do in order to achieve that, and how many candidates. I remember for, one of our VP positions, I talked to 80 candidates, 80.
Wow.
That was very painful.
Yeah.
So, I think, allocating time and figuring out, which use cases and markets and conferences and how should we spend these investment dollars, and should we put it in more into marketing or more into sales or more into product and engineering? I mean, I think these are like all the big kind of challenges that you have to go through kind of as you're dealing with growth.
Okay, great. Thanks, Diane.
I currently consult with startup companies, right, as an acting VP of sales, and I tell you that to tell you this, is that I see the same kinds of problems continually, and there's 4 I consistently see, of which I can only talk about 2 apparently, so if you want to know the others, you can ask me later. But aside from what Lyla said, which is finding the repeatable sales model, it's a whole process in itself, I'd say one of the key things is the ideal customer profile, what we call the ICP. It is much harder to figure out than it sounds. And I don't mean, okay, we're selling to IT or we're selling to the consumer, we're selling to marketer, is what's a profile of that person? What are the problems? How do you find them? Where do they all congregate? How do I fit into what their problems are? So one quick example. When I was at Eloqua, we spent $10,000 to a firm to find our ideal customer profile. So $10,000, and 2 months later, they came back and said, your ideal customer profile is a smart marketer. And I thought, there's no list for that. I can't go buy that. I can't, how's my sales team going to go find that? So what we had to determine and what we grew was basically a list of discovery questions that the salespeople could inquire to the prospect to figure out if they were indeed a smart marketer. And so there's just ways that you have to adapt the organization and how you deal with the customers in order to find that. So that's number one. The second thing, let's see, repeatable sales model. A couple other, what were the other ones? Pricing. I find pricing really hard every place you go. Because now we have freemium, or now we might be an app, right? Or now we're enterprise, or now we think we're going to sell, B2B enterprise, we're going to be $60,000 a year, but we're not really. We're, a social tool, and we're really, $2,000 a month, and luckily if we can get a year contract. So I think figuring out pricing, whether you're freemium or not, or whether you're premium, and how you adapt that into what the customer's willing and the marketplace are willing to accept is very hard.
Great, thanks. Tom?
Yeah, so we were very fortunate when I was CEO of a company called Nominum. We grew to about $47 million. We were cash flow positive every quarter. We were profitable every quarter. We sort of looked on the outside like we never missed a beat, quite frankly. But it was hard, and I joined Nominum right at the time, I guess, when this panel's supposed to be focused on. We had our whole series of first customers smattered across all different kinds of industries. We had all different kinds of products and products in the works. We were basically trying to find our niche, trying to find our customer. And I think for me, the big challenge is really kind of making bets. And you just had to make them. You had to come in, you had to look at what the company had in front of it, you had to look at all of the opportunities. And when you think about the probabilistic likelihood of success for a startup, it's pretty small. So what you have to do is you have to look at each market and each product, to the product market fit. You have to look at all the assets in front of you and pick the one with the highest probability. You're probably not going to get above 10%, but pick the one with the highest probability and make some calls. So the very first thing that I did when I took over as CEO is I just shut down a lot of products. I just basically canceled every product, canceled every end market initiative that wasn't in our target, and we picked a market and we went with it. And the second thing I'll say as to pricing, which I think is a great point, don't be afraid to raise your prices. It's one of the things that we picked the service provider market, so the telecom market. There's only 200 of those or 300 of those in the world. So you can't make up your sale, you can't make up your revenue on the next sale. You can't assume that you're going to, do something to get that customer in, give your product away, and get the logo in, because you'll give away your entire market because you only have 200-300 of these things to sell. So in that kind of market, raise your prices and be comfortable and confident in what you're offering and the value, and learn how to tell that value. So if you're selling at $5,000, raise it to $500,000 and go and start talking to your customers about $500,000. I guarantee you'll talk to a different class of customer, you'll talk to a different level of person, you'll learn very quickly how to sell your value, because now you'll be talking about a $500,000 per seat thing as opposed to a $5,000 per seat thing, and you'll really force yourself and your sales team to make the most out of every engagement. So make bets, raise your prices, that's what I would say. And it's never easy.
Great. Why don't we stay
Oh, and
here?
have a great sales VP.
Have a great sales VP, doesn't hurt. Exactly. Why don't we actually keep this next question down on this side, and I think building off what the first panel this morning or the previous panel just talked about, where the first challenge that a company has in the early days is finding the right customer, the ideal customer profile. But as Lyla mentioned, that often those are your revolutionaries, right? Your early adopters. And oftentimes when you go from your revolutionaries to the mass market or the more mass market, things have to change. So why don't we ask this to Tom and Diane? Did you find that you had to actually drop customers, that there were customers that you had in the early stage that just weren't right for you, and you actually had to go and say, we can't support you anymore?
I don't know that we dropped customers. We began to drop prospects is what happened, because some of those customers invested in us, right? And they were taking a risk, and we needed their success, and they were, let's say that they're a reference for us. You can't really drop that. We would go and renegotiate the contract to something that was fair, and they knew, but I wouldn't drop customers. More, what happens is going forward, we drop prospects, because we were gaining confidence in what we were selling and to whom. We were raising our prices. We weren't discounting as much. Part of it is the sales team begins to, grab that confidence and moves on. So yeah, I'd say we drop prospects.
We drop customers. I basically went through the customer list, and everybody that wasn't in our target customer list, we basically put them into a bundle. We went and found partners to take over those customers. We did license agreements and revenue share deals to basically take them off, to really just get the company focused on its market and where the big market opportunity was. And it was gutsy, but we made some good partners and ended up having a decent revenue stream from those partners because they took what enterprise customers we had. Actually, we kept one enterprise customer and that was the biggest one on the planet, Walmart, because they bought millions of dollars. We thought they would buy millions of dollars. Turns out they did, which was great. But at the time, they were buying like $12,000 a year. It was nothing. But we kept that one, but the rest we moved out, so we did do that.
Great. Why don't we pass down to Lyla on the end? And coming from the marketing background, maybe to ask a question to you and actually then to Kris, what is the role of marketing in this growth stage? Is it blocking and tackling? Is it air cover? Is it reconnaissance? Where to point the missiles? What do you think the most relevant role of marketing is?
So a couple of things, and I think Diane will appreciate this since she drives sales. So leads, driving leads is really important from a marketing point of view. And I don't just mean any type of lead. It's driving to that, really understanding who that ideal customer, defining that ideal customer profile, and then driving leads and prospects that fit that, because that's where you're going to solve their problems fastest and get to revenue fastest. And so putting together, I mean, and this is a whole area in and of itself of really trying to understand what are the questions that you can arm sales development reps and sales with, so that they can do better prospecting to uncover, the best leads that are there. So I think that's one whole area that's really important for marketing to help drive. In order to get leads, you need to really have your messaging and down well. And that, I'd say, is a non-trivial activity to really think about how do you want your company to be positioned, what's that brand. Again, we talk a lot about pain points, so really understanding where the market is, what are the pain points that we solve really well, and then pushing that kind of inspirational, aspirational message, but that is still about solving real problems that are out there. So I'd say, and then to get those leads from that messaging, you really have to drive a lot of thought leadership. Marketing drives a lot of thought leadership into the market. We do a lot of content marketing at Appcelerator. So we have a weekly enterprise webinar where we're taking thought leaders from inside of our company or from our community or from our partners to speak on topics, again, that are about burning problems that people want to solve. That's going to attract the right kind of companies to us.
So basically all three: air cover, blocking and tackling, and directing. Is there one that's more important than the three, of the three?
Well, if you don't have the right message, if you don't do the right messaging and position, if you don't sit and really think that through, you can generate a lot of content, you can generate a lot of leads, but they're not going to be the right ones that move the needle, or they're not going to be the ones that move fastest. So really putting that time in and investing that, and being a smaller company, we're not going to go and hire a big firm and pay them $500,000 or $1 million. I mean, we had to sit and really hammer through this ourselves and think that through, and then go and validate it in the market. See if with customers, with analysts, with press, does this make sense? Do you think this resonates? So I'd say that's the framework that drives everything else.
Okay. Kris, your thoughts on this? You agree? Or?
Yeah, I mean, I think one of the biggest challenges of the growth stage is you bring on a great VP of sales or a great VP of marketing, and let's say that you're the CEO, and you think, I can just delegate sales and marketing now. I've got people, very experienced people that are going to run that for me, and I actually think that's the worst thing you can do. I think a better strategy is to partner with that person to make sure you're still spending a ton of time out in the field and talking to customers. And the key thing here is you have to listen to how the customers explain the problem and the solution in their own words. And if you're not there in the room, you're not able to listen to how they're expressing these things. And you're going to come at it with your own language, and it's going to miss the mark. But if you use their language, and that feeds into your marketing strategy and your marketing messaging and kind of how you think about communicating your story, that's actually, I think, how you really kind of connect with your market. And so I think the number one mistake, is scale with bringing on very experienced people, just delegate to them and just expect that magic is going to happen, and that's absolutely not the case. The other thing I would say is a big mistake is thinking that you can grow revenue by adding sales headcount. So if you just say, we want to double revenue, let's double our sales team. I've worked in a startup where that happened. I worked in 8 startups, but at one in particular, I was the VP of sales, and the board said, we want to double sales, go and hire, we had 7 or 8 salespeople. They wanted to get to 15 or 20 salespeople. Let's go hire these people. It's really time to step on the gas. By the way, we didn't grow the marketing budget. The marketing budget was flat, and we doubled the team, and bookings actually stayed the exact same, but the sales productivity per head count went down by 50%. So you can imagine how happy everybody would be, after that happened. So but I think those are maybe the key things: is don't delegate the responsibility of sales and marketing to the sales and marketing people. partner with them. And then the second thing is, if you're going to drive sales, it's not just about adding sales headcount, it's about investing in marketing, it's making sure your messaging's on point, it's that you're ready to start kind of turning the crank, and then I think that's where you start to see the growth numbers, appear.
Great, thanks. Let's turn a minute to the human factor. And you can say that the people that get you to your first 5 customers may not be the people that get you to your 100 customers. And why don't we start with Tom? Ask Tom, was there a point in your executive team where maybe the people that you need to get on the bus couldn't get on the bus, or you had to pivot all of a sudden and you had to kind of look elsewhere?
Yeah. So we tried something, and it was an experiment at the time, and it was an idea that I came up with, and we implemented it, and it ended up being the main way that we grew our organization. So we achieved all the growth that we achieved and so forth with all internal promotions. So we did not ever bring on an external executive person, someone who's been there and done that. It was essentially, we needed the role filled. We looked in our team, we looked for the people who had the passion, who maybe knew, I think we were talking outside, like half the job. And we went and we tapped them on the shoulder and we said, hey, this is your new gig. And we're here to support you, and we're here to make the most of this, and we're going to make you successful. And we never lost a single executive. Nobody ever flamed out. In fact, we had 100% success rate in all of those roles, and it really cut down on our hiring costs. It cut down on our variability in headcount. It sped up our execution. It invigorated the entire organization because everybody saw a path to leadership, and it was just a wonderful model. So, but you have to do that constantly. You have to constantly re-look at the team and rebalance it and refocus it, and just because someone's job is something one year doesn't mean the next year they're still their job. I mean, you constantly, as CEO, you have to constantly continue to look at that and make those adjustments. But if the organization is growing and you're doing well and you're raising prices and doing the things that all these great folks are suggesting that you do, there'll be room for everybody to kind of fit in and to fit some new promotions as they come along. So that's what we did. And hopefully that helps you guys as you think about your own organizations.
Why don't we get the sales perspective and ask Diane the same question in terms of growing sales teams. Were you growing organically? Did you have to change the people on the sales team as the market changed or as the company grew?
Yeah, so there's several things that we do in terms of the model, and sort of to what Kris said, is you can grow teams by adding people. Let's say you have territories, you have geographical territories, and then you split them up. At some point, you'll become saturated. And so this gets a little bit to sort of the experimental side. So at Eloqua, for example, I brought in verticals. I brought in an enterprise person. I brought in a financial person. Some of them worked, some of it didn't. Other things we tried are we began to look at the inside, sort of outside sales model, where we'd bring inside in. So it costs $400 a touch for an outside salesperson. It costs $24 a touch for the inside salesperson. It costs an enormous amount to do a deal, to get all the way to a deal and not make it. So all of these factors, if you can get inside sales, not necessarily the best for every market, but if you can, it's a good way to go. And so the way that we introduced that is we'd bring inside sales in, and we did it by revenue of the company, so customers $15 million and under. And so that's sort of how we test marketed the inside sales. And then we moved up that marketer as we were finding success, all the way up to $250 million eventually. But at Eloqua, we were on a growth mode, and we were hiring people, and we overextended, and we had to do layoffs. And it's a horrible thing to do, and it's hard to justify in a particular salesperson's mind when you have to do layoffs while you're growing. But it was to manage the capital. So.
Very interesting. Let's actually let's turn it back down to Lyla on the end. Was there a manual process that you had to move to automate very quickly when you got to the growth stage, something that you looked at and you said, either within a marketing team or how marketing relates to sales or other organizations, that clearly you said we can't be successful if we have to keep doing this manually?
Sure. So we there's a number of things that as we matured, we started to use a lot of data to make decisions. And so getting your hands on that data and having that come to you in an automated way, as opposed to having to do these manual reports and manual polls, were really important. So defining what are the right metrics that you want to be looking at, and then obsessing over them and getting them in an easy way to look at. Also, different things around marketing automation, we would look at, so lead scoring, that, when at first it was just great to get leads. Then it was about scoring those leads and focusing on the right leads and figuring out where do you want people spending their time. Defining a lot of those processes around the handoffs and the SLAs, and having alerts come to you when SLAs are getting breached by individuals so that you can go and follow up. All of that needs to be automated, otherwise you're talking about a one-on-one once a week where you're trying to pull the data beforehand and do some coaching around that. So you can use a lot of automation to drive productivity in that way.
Great. Automation, certainly with products like Eloqua and Marketo would be
Yeah, I gave a nice
great.
little
Yeah, put the plug in for them.
that.
Plug in for them. Chris, how about you? Can you think of like one or two processes that you just looked at and you said, I got to automate that?
Do you mind if I just answer the prior question?
You can do that too.
And so, when you're hiring executives and building out your team, I absolutely think that there's a person for the stage of the company, and it's just the reality of life that, one person's perfect execution in one stage doesn't match what's needed for the next stage of the company's growth, and that's not, a huge emotional, thing to just, to worry about. It's just the reality of that person is perfectly built to perform that stage. And, I would say I always knew that, kind of conceptually, but, I would say kind of going through the last 3 years, it's really interesting to me to see somebody that you hire, if you maybe hire them a little bit early for where your stage is, or somebody that you've had that's been around for too long, now you're entering a new stage, really their ability to transition in many cases is extremely difficult. And you just have to, kind of take action to kind of, to address that. The other thing I would say is that when you're just adding people, you can't underinvest in the team development. And so, there's this whole kind of like team building framework around like first you're forming and then you're storming and then you're performing. I think there's another ing in there somewhere. But I mean, it's true. I mean, you're talking about bringing people with lots of different life experiences together. Hopefully, as CEO, you're communicating the mission, the vision, you're telling the story, you're getting everybody on the same page. But even if you're repeating that every single day, people's interpretation of that message is it goes through like this game of telephone. And and maybe your executive team knows it, but one level down below doesn't know it, or 2 levels down below. And so I think just figuring out how do you invest in the culture, the team, getting people comfortable working together, up and down, but and across the organization, I think is a huge opportunity when you're going through the growth phase.
So you basically have to be testing the ship out, pushing it as hard as you can, because when that growth comes and the wave hits, that's too late if you're trying to train everyone then. Very, very important. Well, one last question to everyone. If you had to pick one piece of advice to folks in the audience, and I assume there's lots of people here that are in companies that are kind of looking up at a big number for the next year. They're saying, "Wow, that's a real big number." What's sort of the one bit of advice you give them, just to say, "Here's what you got to think about. Keep this one thing in your head." Why don't we start? Well, you can start in that, yeah.
I mean, I just think back to it was something that my dad told me once when, after we had our first kid, and he said, the next 3 months are going to be the hardest. And then 3 months later, he said, the next 3 months are going to be the hardest. So, I guess that's what I'll pass on here.
I would say almost brutal level of prioritization. So we go through a process every quarter, and certainly on an annual basis, where we look at, there's just so much opportunity, right? And so many great ideas, especially when you're doing something that's new and you're pioneering. There's just lots of different creative things that you can do, and you're tempted to try all of them. But to really go through a prioritization process of understanding what are the objectives, where do you need to be at the end of the year, in terms of whether it's seizing enterprise market leadership or driving to a sustainable business model, and then forcing all the different projects or priorities underneath this and prioritizing that, because otherwise you'll have a lot of great people running after a lot of different things, but you might not end up moving the needle at the end of the day.
I have to say 3, but I'll make it really quick. So one is customers, customers, customers. When you start up, you just get the whole team swarming. If you've ever watched 3-year-olds play soccer, swarm ball, swarming around customers, so that happens early on. I'd say another thing is communication. So at several of my companies, we would sit down as an executive team once a week to do, like what you said, the brutal prioritization, because product would want to build certain features or sales needed it, and at some point, you have to have the trade-off. And so you want the different departments involved. And the last thing is, if you're the executive of the company, once in a while, just make a decision. Having a little too much, and I've experienced this at several companies, even ones that were successful, a little too much collaboration just takes too long to do some key things.
Hi. I would say have the courage to redefine morale. Everybody thinks about morale as, people being happy or people being content and so forth. We define morale, and it was stated and it was known throughout the company as a combination of the following factors. It's everyone understanding the objective, everyone understanding the inherent goodness of the objective. No matter what you're doing at the company, no matter what kind of company you have, you are delivering value, and that has inherent goodness. And make sure you explain that to everyone. The third is making sure that everybody knows their role in achieving that objective, and making sure that they understand that their leader has the ability to get them there. So whoever their leader is, if it's a product manager over a product team, a sales leader over a sales team, a support person, engineering person over an engineering team, all the way up and down the line, that people define morale along those lines. And if you do that consistently, as Kris is pointing out, over and over, deliver that message. What is our objective? What is the inherent goodness of that objective? Does everybody understand their role in achieving it, and do they believe in their leader's ability to get them there? And if you continually communicate that message, you'll actually achieve all the growth that you hope to achieve in this stage. So that's what I would say.
Wow. Well, that's a great note to end on. So I'd like to thank the panelists for the great insights today, and thank everyone for being a great audience. Thanks very much.